All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES tested above the previous all-time high of 80.5 and found responsive sellers, some profit taking up there. So right now, heading into the open, we're open to the idea that ES can still attempt a breakout, but we are going to be very careful up here. This is all-time high territory, and there could be a bit of back and forth before we get any sustained movement to the upside. As far as the other markets go, we're going to be watching NQ and TF to see if they're able to break out as well. They are at short-term inflection points, and right now there is a pretty clear negative divergence between the other markets and the S&P, and for that reason we have to be really careful buying the market up at these aggressive prices. Um, with NQ, you want to see a breakout above 36.67, and with TF, you want to see it taking out at the very minimum the overnight high, 89.3, and then showing some form of directional conviction early in the morning in order for ES to head higher as well. Otherwise, we could see a potential failure up here in ES, and then we get a pullback as the other markets kind of consolidate as well. But right now, NQ and TF, very tight consolidated balance overnight and primed for a directional move. The question is whether that directional move is going to be continuation to the upside or potential failure for a pullback. So, right now with no major econ reports due today, it definitely calls for caution on taking any longs at these upper prices. And if you are taking any longs at aggressive prices, let's say the market does set up off the open and we get a decent move, I think it'll still be important for any buyers in this market to be quick and nimble. That means that if you're taking a trade, I wouldn't just hold it and wait for target and wait for stop. I would be a little bit more flexible with managing that trade, which means that if you're entering long at a high price and it's not working out, you probably do want to scratch that trade instead of just holding it, unless the other markets are just purely directional. So, at these higher prices, yesterday we had a clear bullish bias and we had an upside target. Now that target's already been hit, and we're trading near the all-time high, and that's why we have to be careful. It's better to look for long setups on pullbacks into support rather than taking them at these higher prices, unless there's a breakout in NQ and TF. Then we can still get some continuation in the S&P, but just realize that S&P is quite extended. It's trading near the all-time highs, and the other markets still have a lot of catching up to do. Now ES has been leading, so we're okay with taking longs, but you just have to be careful of location. Don't buy too high unless you're seeing the setup clearly in real time. Otherwise, the conservative longs are going to be on pullbacks into support. So on the downside, we have 70 quarter to 72 quarter. That's the first support area. And, given the strength in the market, unless we're getting like a breakdown in the other markets, we should still get rotation at the zones. And again, when you're getting a bounce off a support zone, you want to monitor that bounce and look at kind of how how strong that bounce was, because if it's just a 2 or 3 point little bounce and then it starts bouncing at support, that could also be setting up for a probe lower. So even off the initial support zone, you want to see a decent reaction, pretty much right away. And if that doesn't happen and ES just kind of bounces a bit, then you want to get out of the way and be willing to scratch the trade and buy lower. And 68 quarter, that's the breakout area, decent spot for buyers to step in. And then 64 half to 66 half in most scenarios is an automatic buy. That's a decent support zone, a lot of confluence there, a lot of volume traded there, even short term and longer term. So that is a very important spot right now in the market. And if we're going to still continue to make all-time highs, then that zone should hold. So in most scenarios, that is an automatic long, and that is really a key inflection point where we could get a decent reversal if we head down there. So right now, even though our bias overall is still bullish, we do have to watch what NQ and TF do here, and then still get decent trade location if we are going to head higher. It's not just we're not just blindly buying up here. We're aware that there is resistance up here. We have the all-time high, overnight resistance as well, and we want to see the other markets lift in order for us to consider buying pullbacks in the S&P. And then on the upside, we would be looking for, if we break out above 81s, we'd be looking for a move up to 86 and the 87.5 to 89.5, and then we can get some profit taking and responsive selling at those zones as well. So those are really the main ideas on the day time frame. Let's see how the other markets hold up off the open, and then based on that, decide how conservative or aggressive we want to be on the long side, and potentially even consider shorts. It's not like we can't consider shorts. If the other markets start breaking down, then we can take it. But we don't want to short the market simply because it's near the all-time high, because there is that potential for continuation. So right now, the conservative ideas are buying pullbacks into support or taking a short setup if the other markets stage a failure. But until that happens, I would not short this market. We can still get some pops up here. It could be balanced, it could be choppy, but we can still get some pops up here. So those are really the main ideas. Let's see whether we can stage a breakout in NQ and TF, and then take it from there.